Hello everyone guys, and welcome to my new training series here on YouTube. In this series of videos, I will be sharing concepts and techniques that I personally use in my approach to the market. And the goal is to provide you with the tools and knowledge you need to better understand and apply trading strategies effectively. In this video, we start by diving into the anatomy of a Japanese candlestick. We'll explore its structure, the meaning of its component, but that's not all. We'll also cover how to understand a bullish or bearish trend, giving you a general overview of the market moves, because we'll go into more detail about the market phases into the upcoming videos, but it's essential to start with a solid foundation of these key concepts. So if you are ready to begin this journey into the world of trading, sit back, relax, and get ready. So let's start with the anatomy of a bullish and bearish candlestick. A Japanese candlestick is a powerful tool used in technical analysis to represent price movement in the market. These are Japanese candlesticks. The green candle represents a bullish movement, meaning price went up, and the red candle represents a bearish movement, indicating price went down. The thick part of the candle is called body. It shows the difference between the opening and the closing price during a specific time period. For the bullish candle, the opening price is at the bottom of the body, and instead for the bearish candle, the opening price is at the top. This reflects the direction of the price movement. The closing price is at the top of the green candle at the bottom of the red candle. This helps us see whether price went up or down during that time frame. The thin lines above and below the body are called wicks or shadows. The upper wick shows the highest price reach, and the lower wick shows the lowest price reached during that period. The tip of the lower wick marks the lowest price that the asset reached. Instead, the top of the upper wick represents the highest price reached within that candle time frames. Now that we have covered the basics of candlestick anatomy, let's move into a deeper look at the three important types of candles that you can see on the charts in your trading journey. These three types of candles are doji candles, candles with a full body, and small body candles. This one is a candles with a full body. A candlestick with a filled body indicates strong market pressure during the time period represented by the candle. The fact that the body is filled with no or short wicks highlights a decisive movement in a specific direction. The important characteristics of this candle are filled body, that means large and solid body with a visible difference between open and close price. And this candle indicates that the price has moved considerably during the period. Short or no wick, this means that maybe the wicks are present but the body is more significant. The candle can be either bullish, in this case green, or bearish, in this case red, depending on the direction of the move. And the market pressure show a clear market direction, either bullish or bearish, and suggests a strong momentum. The candlestick indicates low market pressure during the time period represented by the candle. In this case, the difference between the opening and the closing price is narrow, suggesting that the market has not made a decisive move in one direction but has rather experienced indecision or consolidation. The three characteristics are small body with a limited difference between open and close price. Wicks can be relatively long, that showing that there was some volatility during the period, and a small body candle indicate indecision but not as strongly as the doji candle. Candle often appear during consolidation or periods of uncertainty. The doji has a very small body, where the opening price is very close to the closing price, and sometimes making the body appear almost non-existent. This indicates that the buyers and the sellers have reached a point of equilibrium. So the body is very small or absent. The wicks can be long or short, but the key feature is the tiny body, and a doji indicates indecision in the market. That's no clear direction since buyers and sellers are in balance. Now that we have covered the basics of candlestick pattern and the anatomy of a candle, let's move into understanding how to identify a bullish or bearish trend. A bullish trend is a market situation where prices tend to go up, often driven by increasing demand or optimism. We identify a bullish trend when each high and low is higher than the previous one, so we are seeing a bullish trend. Also, in a bullish trend, we can see the lot formation of green candles, so numerically there are more green candles than red ones candle, because in the charts the red candle is a bearish candle and the green candle is a bullish candle. But if you want, you can also change these colors. And additionally, in a bullish trend like a bearish trend, we have two types of market condition. The first one is expansion and the other one is a retrace. So from bullish, we can expect a retrace or a reversal from bullish to bearish scenario. And this is the same from bearish to bullish, but we will explain the full condition of the markets in the next video. So, happen if a bullish trend starts to lose. This happens when a bullish trend starts to lose volume or if the high becomes lower. It could be a signal that the trend is losing strength. Instead, now that we have covered a bullish trend, let's look at the opposite, the bearish trend. A bearish trend is when prices generally go down, driven by factors like increase in selling pressure or negative sentiment in the market. In a bearish trend, each high and low is lower than the previous one. Additionally, in a bearish trend like a bullish trend, we have two types of market condition, like an expansion and a retrace. So guys, that's all. I hope you find this video helpful and insightful. If you did, don't forget to like, comment and subscribe so you don't miss any of our future content. Thanks for watching and happy trading.